Hi, my name is Ranjit, and thank you for joining me once again. In this video, we look at a snapshot of Tesla's earnings. The company announced its Q4 2022 results last week, and we'd like to see if the performance beat analyst expectations and what is their forecast for future business. We're also going to look at some of the key financial matrices and look at underlying trends. All right, let's begin. In Q4 of 2022, Tesla earned a revenue of 24.3 billion US dollars, a growth of 37% year on year. Operating income of 3.9 billion US dollars is a growth of 49% year on year. Earnings per share grew 54% year on year at $1.07. The rising trends in these matrices over the last 5 quarters is quite impressive. The results beat analyst estimates on EPS but missed on revenue. In addition to this, the company forecasts a 37% increase in production in 2023. The higher demand arising due to discounted prices. Now let's look at some of the underlying trends in key financial matrices. Revenues have grown 37% year on year. Operating income has grown 49% year on year, and earnings per share has grown 54% year on year. The underlying trends in all three of these matrices are positive. The negative is in cash from operating activities, which has fallen 27% year on year. In addition to this, another negative is the inventories have increased 123% year on year. So clearly the strategy to discount prices in order to boost sales is probably the right way to go if they want to reduce inventories and increase cash flow from operating activities. This is the chart of Tesla's stock price, and since its November 2021 high of 415, the stock price is down 56% when it closed at $176 per share last week. Earlier this month, Tesla was closer to $100 per share. So in the last 3 weeks, Tesla has rallied almost 70% in price. Now, given the present earnings and the forecast that the company has provided, is this a share that I would look at picking up if I was a long-term investor? Well, at the current price earnings ratio of 44, it is well below its 5-year average of 228 that the stock has traded at. And of course, it is interesting when the stock price is 60% below its high. This is still a growth stock. There's, in my opinion, this looks like it's a growth stock because whatever earnings that this company is currently generating, it does it out of 2 models currently. Now, usually, most car manufacturers have 10 to 15 models that they sell, targeting various clients. So I think considering that Tesla is still at 2 models and the fact that most of this revenue is generated out of 1, this stock still has a long way to go, in my opinion. However, would I buy the stock at 176? Probably not. I would maybe wait for some sort of a pullback. A 70% jump in price in a short period of time usually results in some sort of a pullback, maybe towards 145 or 125 maybe. And perhaps in that range, I may look at starting to buy Tesla shares. Now, this is just my personal opinion. It depends on each person's appetite for risk because this is a highly volatile stock. and one should always invest depending on one's personal risk appetite. That brings us to the end of this video. Please visit www.claritech.app for more innovative market analysis or financial market updates and to track corporate earnings. None of this is expert advice. I'm just learning alongside you. Please also read our terms and conditions. Thank you for your time and thank you for watching, and please subscribe to our YouTube channel, and I hope to see you again in the next video. Bye bye.